A very good evening to all the panelists and the participants joining us in yet another debate at the Indian Association for Energy Economics. Today, we have got you a fun format where we're going to have an in-conversation style of exchange on a pertinent topic for India's energy transition, which is to understand the role of gas going forward as we inch towards a much cleaner and sustainable future. So before we dive into the debate and discussion itself, I would like to quickly introduce our panelists and kick off by asking the president to make the opening remarks. So we have Dr. Sushanta Chatterjee, who is the president of the Indian Association for Energy Economics. We have Mr. Anjani Kumar Tiwari, who is the member of the gas regulator in India, PNGRB. Then we have Mr. Samir Saxena, who is the director at Grid India, and would be bringing in a little bit of power sector interaction with gas. Then we have Mr. Rajesh Mediratta, who is the MD and CEO of the Indian Gas Exchange. And to complement the discussions from the experts, we have our discussant Ashutosh Shastri, who is also a board member with the Indian Association for Energy Economics and director with NSTRAT Consulting. And lastly, we have Mr. S.P. Sethi, who is a board member at Indian Association for Energy Economics as well, and also has served as the former principal advisor for energy and climate at the Government of India. So with that, Sushanta sir, I give you the floor to quickly introduce us and set the tone for today.
Thanks, Sweta, and good afternoon and good evening to all who have joined our conversation today. It's my pleasure to present before you the In Conversation online event on understanding India's future gas demand. As you would be aware, the Indian Association of Energy Economics has been in existence for the last couple of years. The prime objective of this forum is to brainstorm, undertake research, and present independent perspective on issues of relevance for India in particular and the world in general. I-AEE operates as an association of persons, AOP, and seeks to bring together persons with interests on energy as well as economics. I-AEE has been engaging in debates and discussion on various aspects of energy transition over the last couple of years. In the past, we have brainstormed on various topics. And to just give you a couple of examples, some of the topics that we delved deep into was mapping India's energy needs, the energy storage systems, prospects and challenges, and so on. And in today's debate, we are seeking to explore the role of gas in India's energy transition. India is reported to have set a target of 500 SCMD of gas consumption by 2030, as against the consumption of 185 SCMD in 2023-24. It is indeed quite ambitious. This would require manifold increase in gas production and infrastructure. The idea of today's debate is to understand India's future gas demand in various sectors. The major consumers of gas, of course, include power, city gas distribution network, refinery, fertilizer, petrochemicals. This demand needs to be assessed against the backdrop of availability of domestic gas, our dependence on LNG imports, as well as, importantly, gas price. Today, we have a stellar panel of experts ranging from gas regulator, as Sweta introduced, industry experts, power system operator, apart from quite a few eminent board members of I-AEE with expertise on the subject. We at the Indian Association of Energy Economics intend to bring before you discourses on critical issues on energy and economics through debate, call for papers, roundtable and publication of journals as we move along the journey of our growth in the days to come. We look forward to a healthy discussion that aids us to understand the dynamics of the gas sector in detail and also subsequently to come up with a policy brief on the subject. I request all of you who have joined today to join this association of Indian Association of Energy Economics, enrich it and help it emerge as a powerful intellectual force in the world of energy and economics. With these brief remarks, I hand over the uh, baton to Sweta to moderate and take the discussion forward. Thank you.
Thank you, Mr. Sushanta. You've set the tone for the discussion, and I think you did touch upon some of the key words, which is the demand, the infrastructure, and the pricing. So I think we would also try and sort of set the discussion in that order. So we will have Mr. Tiwari, where I will pose some questions to you more on understanding where would the demand sort of grow, and how do we see the necessary infrastructure to sort of supply to that demand play out, and what is the regulator sort of doing on that front. Then we will move to Rajesh sir, where we will try and understand how is all of this demand supply being procured, how much of it is more domestic and how much of it is international. How do we see that dynamic playing out as the demand for India goes almost threefolds by 2030. And then we will also circle back to Mr. Saxena and talk about specifically the role of gas in the power sector. Will it sort of play the transition fuel as we try to slowly minimize our coal and move towards more renewables? Is gas even a serious competitor in the power sector mix? And again, what are the factors dictating that? And I hope, Ashutosh, you will have some more interesting and challenging questions for the panelists after my set of questions, and also inviting Sethi sir for the same. So without further ado, I would like to pose the first question to Mr. A.K. Tiwari, who is the member from our gas regulator. And I think the first basic question that all of us who are not gas experts would love to understand from you, sir, is we know the ambitious target that the government has set for 2030, but how do we see this demand increasing from now to 2030? And particularly in which of these end-use sectors do we see this demand increasing? And are there any sort of favorable reasons as to why one of the end-use sector we might see more increase in demand, say, be it the fertilizer, which is the largest chunk of the gas end-use, or do we see it also sort of percolating more in the city gas networks and others? So that's the first question to warm up the discussion, sir. So over to you.
Thank you, Sweta, and I welcome all the panelists here. I am seeing Asutosh Sastri ji smiling, and all the panelists, Mr. Rajesh Chatterjee, Mr. Saxena, Mr. Sethi. Good to see you all, and all the those who are connected in this forum. So, before giving the details, these data are available with everybody. What is going to be where the consumption is there or not? I would like to give some perspective of where we are. So, if we talk about the energy mix, be it a coal, be it a renewables, be it a natural gas, hydrogen, which is new host, CPG and whatnot, every energy is going to find its place in India. So, energy transition per se is not a transition from one set of energy to another set of energy. It is parallelly moving, and our consumption pattern in the country is increasing day by day. So, coming to the natural gas, particularly, if you see the total natural gas scenario in the country, where we are having the LNG terminal, we are having the pipeline infrastructure. I will talk about the main pipeline infrastructure. And then we have CNG, means CGD, which infrastructure which are there, domestic production which are there. So all these elements which are there are going to contribute for consumption of gas in the country. But the few elements which are important is the gas production, natural gas production in the country, which are limited and which incrementally may be increasing, but in totality, at present scenario, we are not finding that there will be much production of the domestic production, though the government policies and the government initiatives are being taken. So if we have to come up with the consumption of gas in the country, the LNG terminals, the total scenario of LNG has to be increased. And from LNG to the natural gas pipeline to the uh, your city gas distribution. What I found that in India, though we have LNG terminals which are tilted to the western part of the country, there are the pipelines which are eastern part of the country, and there are the main trunk pipelines which are there. Distance between one trunk pipeline to the another trunk pipeline is 200 kilometers to 400 kilometers. So what I mean to say, the infrastructure per se, if you say national gas grid infrastructure is per se is not a national gas grid infrastructure. And there are we need to have the spider net of the pipelines to reach to these geographical areas. PNGRB has allotted already 300 geographical areas in the country and covered all the places. So future lies for the consumption in the country for gas in the CGD sector, followed by the PNG where the target is there, CNG where the target is there, and the industrial and commercial uh, customers which are there. So first and foremost important sector where the growth of natural gas consumption will be there are the CGD sector. If I come up with the data where what is the pattern of this fertilizer, if you talk, I don't think much of the incremental growth will be there. Refinery, there will be some incremental growth. Petrochemicals almost may be saturated. Power, we have a different scenario. But the CGD, where the at present around 42 to 43 MMSCMD of gas is being consumed, will increase further. These can only be possible if a spider net of the pipelines are there, wherein there are number of reforms being done by the PNGRB, regulatory reforms for allotting the licenses throughout the country. This is going to impact. Then there are the pricing reforms where the allocation of APM gas and pricing cap of APM gas has been done by the government. There are the tariff reforms. I would like to share here that we have already implemented unified tariff, integrated tariff, and further we are going to incentivize the entities in terms of the tariff reforms, which is very, very important for means creation of the infrastructure in the country. So these, so far as the PNGR are concerned, is being done. And the gap between the LNG terminals to the CGD companies, which are very, very important, has to be sorted out. And this is the only way where the demand creation could be achieved of 15% from at present 6% to 15%. And the CGD, I find, is the one area where the growth could be accelerated, and wherein one of the important factors being played by the Indian gas exchange, so that the trading could be more and more by the CGD companies, so that the demand will be there. So in that cell, what I found that uh, with so many reforms we have done by PNGRB, CGD is the sector where the growth is expected and is increasing at the rate of CAGR of 8 to 10, 12 to 13% at present. So this is the area where the growth will be there.
Maybe a quick follow-up to your remark, Mr. Tiwari. You said the city gas network is where you see the highest potential to sort of expand to meet the overall demand projections that we have. We see that the network itself has impressively grown by more than like 38% just by 2023. But still, the uptake of the gas consumption to this network is still very minimal. So could you throw some light on what the regulators is doing in terms of making sure that percolation of these policies happen from a center to the state level, so that utilization of these infrastructures is high, and so that we avoid the situation of stranded assets. So could you give some details on that?
So thank you. This is a very important question you have asked. See, making the policy and implementation of the policy. They are the two aspects of that. As I have told that we have made so many reforms, including tariff reforms, pricing reforms, regulatory reforms. But what we could say that every state where the geographical areas have been given to the entities have different issues, different problems are there, political issues are there, permission issues they are there, permission charges are there, VAT issues are there, and so many things. So what as a regulator, besides the regulations which are required to be changed, what we have done that every state PNGRB is taking up the matter with the state authority, chief secretaries. And with this, the permission charges, VAT reduction, yesterday Bihar with the intervention with the followed by the PNGRB, Bihar has reduced the VAT to 12.5% and 5% to the PNG like that. And we have followed so many states where the VAT has been reduced. GST this has to come to the GST. That is a different scenario which may take time, but VAT is one of the important things. Similarly, there are many intermediary costs which are there in between. We are taking up the matter with the state authorities, including the permission charges, which are very high in many of the states. So that way, besides the regulation, we are intervening with the states wherever the issues comes up by the entities, and we are resolving the issue. So PNGRB, in fact, not only working as a regulator, we are also working as a facilitator to the CGD companies, to the pipeline operators, and we are trying to resolve many issues, taking up the matter with the central government as well as the state authorities.
Maybe a quick add-on to that question, Mr. Tiwari, is do you see a more pronounced role for public or private entities to come in sort of building this infrastructure and also help in sort of utilization? Or because for some of us, we are still not fully familiar with the gas sector, so it's a very simple ask. Who is going to play the major role going forward?
Both are paying. If the allotment of the 307 licenses, if you see, around 50% are the private players. Adani is there, Torrent is there, joint venture of PSU and the Adani is there with the Indian Oil Corporation. Private PSUs are there, and as well as the joint venture of the PSU companies are there. So the role of, and even the FDI has come. AGP is there, Torrent Gas is there, Think Gas is there. They have collaboration with the foreign investors also. So that way, it is a vibrant sector where not only the government PSUs but also the private sector have participated in aggressively, and they have given a good target for PNG and CNG connections. So what I mean to say that this sector is a vibrant one, wherein around 50% of the companies are private, and their target are also, and they are doing very good in respective areas. I would like to share that each kilometer, which is the target, which is the basic for infrastructure development, we have reviewed and we have found almost 80% of the this target has been achieved for laying the inch kilometer, which are important for PNG and CNG connection. So that way, this vibrant sector is being supported by not only by the government companies but also the private sector companies, and lot of FDIs are coming to that.
Thank you, Mr. Tiwari. Maybe since you mentioned that there is such a competition of people coming in, do we see emergence of sort of new business models like how we see in the power sector? For instance, Adani has gone to procuring the coal fields in a country X so that our supply position is sort of secure. And as we are going to become more internationally dependent on gas supply, do we see Indian companies doing something similar also in the gas sector?
Yeah. Every company is trying to have a smart sourcing of gas, mix of gas, means portfolio they are doing. and aggregators. So we some of the traders which are there, Gale and others, they are also having the good portfolio. But I have found, and I have discussed with the many of the CGD companies who are there, they are also having a good tie-up in the process for sourcing the gas. Smart sourcing. Smart sourcing means it is a very, very vibrant word, but they are procurement, including they are taking the risk also. They are also having the so many other portfolios, and also they are trying to de-risk in different type of financial models, so that these are coming. So I am finding, I am interacting with them. There is a good, vibrant way of sourcing, and where the IGX is there, they are also supporting. So that way, I find that what I feel at present, that we are going to be a good hub in the near future. Our prices, Dixie prices, will be supporting price for the gas in the future. And though it is a very at the nascent stage, but my confidence says that with the growth and with the import and with the domestic productions, our gas exchange is going to play a very crucial role in the CGD sector, particularly for the gas-based economy.
Thank you, Mr. Tiwari. I think on that note, I will move towards Rajesh sir, since we are coming to talking about procurement and particularly the role of the Indian Gas Exchange. So if you look at some of the data, it's I mean, clearly the demand is going to grow threefolds. But if you look at the domestic projection data, it's projected that by 2026, we will sort of peak, and then there will be a reduction in the domestic production. That means of the 500 MMS SCMD, almost 400 of it will be dependent on LNG imports. So how do we sort of see this interplay between domestic and international procurement play out, and particularly how is the pricing going to come into this? Because I think different products are priced differently, and we would like you to throw some light on this.
Thanks, Shweta. And of course, a very good afternoon to everyone who are there on the call. What you said is very true, that given the situation today, we are now buying 50% of our requirement we are importing that. So 50% import and 50% is domestic. Today, that is the composition. And this composition will largely change because our domestic production will plateau. Though government is putting a lot of efforts to expand the exploration, but somehow we are not able to increase the production, our own production. So given that in 2030, if we achieve a total consumption of 500, so today the ratio, which is currently 50-50, will become 25-75. And I think there is no stopping that because very limited scope for increasing exploration. Exploration is very tricky and messy. And though government has issued some more, opened some more blocks for bidding, and bidding has happened, and the exploration will start, but this whole cycle gestation is very long. So for 10 years, at least and we can expect something to happen in 10 years time in the new blocks. So what I see that how this whole thing will be impacted because of pricing, because one is that if you see our domestic gas, it has largely two pricing regimes. So, 60% of the total domestic production, which is done by ONGC and oil, that is fully regulated. So there is no freedom for those producers to sell anywhere else. Allocations are being made, and allocations are being made as per the priority what government thinks that we should give to sectors which need them at a cheaper price. So they have given some allocation. They have some allocation criteria. So CGD, of course, comes first. In 2008-9, power used to be coming first, but after that they changed this priority from power to CGD, and then almost 60% of that APM gas goes to CGD, and balance is given to some part goes to power, fertilizer, and other industry. Now, second part, which is ramped up during last 3 years, was the one which has got some marketing and pricing freedom. So there is complete marketing freedom. It means that those producers, particularly Reliance and ONGC, who are producing in the offshore field that is called deep water in KG Basin, and there they have given that freedom that they can sell to anyone. Of course, there has to be arm's length price discovery and arm's length sale should happen, and they have allowed that to be sold through exchange or through tender. And tender also has to be through empaneled agencies. So DGH has got have empaneled 5 agencies, and you can sell either through empaneled agency. And normally these producers are selling that gas for long term, which is about 3 to 5 years in case of this production. So they are selling that gas through auction. And balance, if they want to sell something in spot, so they can use the exchange, and that part they are doing. Now, in that also they have capped this price. So not that there is a complete pricing freedom. There is a pricing freedom, but there is a cap to that price, and with that cap is not very low. That is at a level of something like today. That cap is derived from a formula which is linked to oil. So whatever oil basket India has and it consumes, so 10% of that in terms of dollar per barrel, that 10% is the cap. So today, if you see that, and that cap is fixed every 6 months. And for this particular half of the year, the cap is about $10.16 per MMBTU. So the cap is also not at very low level, but it's fairly good. But still, people feel that there should be complete freedom for sale of that gas, so that there is enough incentive for domestic producer to expand their production. And because if you want to attract investors in exploration, then the foreign investors expect that there should be complete pricing freedom, no cap, so that they are getting the value of their product as far as at the international level. So whatever internationally is the price, whether it is low or high, they should be able to get that price. And I think there is one reason why not many foreign explorers have come into Indian market, even through this bidding. One reason was that the people think that this is more a political issue, and government may put some restriction over a period of time, and they want that kind of certainty that over, say, next 25 30 years, when they are exploring, that time they should be given complete freedom. So there is some kind of hunch among those companies like ExxonMobil or BP or others. So BP is anyway associated with Reliance, so they are part of a consortium, but others have not come in the exploration side in India. So this is the story of our domestic gas. On the import, there is complete freedom. So only limitation is that people have to make a choice whether they want to buy under long term or short term. The same thing what we currently have in power sector, that people have to take a call. If they want to buy under long term, generally long term gas is priced linked to oil or based on some gas on gas index. So again, in gas sector, there is a very different kind of mechanism where, because gas started much later to oil production, so some of the gas is benchmarked, whose price is linked to oil. So oil indexed gas is also there, and then gas on gas price linked benchmarked gas is also being sold. So normally when people buy under long term, then it can be one of the two, but normally it is linked to oil. And when you are buying under spot or say short term, which is say anything up to 1 year or 2 year, then that is generally linked to or some benchmark which is gas on gas. Just for the people who are new to the sector, we use the buyers use generally Brent as one oil index benchmark, which is very liquid, and generally people are buying linked to that. And second, which is either linked to WIM. WIM is West India Market, which is the benchmark which is published by Platts. And there's another benchmark published by Platts is JKM, which they are very common in India. Of course, there are other benchmarks there in the globally, which is like Henry Hub and TTF. And Henry Hub is also being used for one of the long-term imports into India. But generally, spot gas is not purchased linked to Henry Hub or TTF. Rather, they are linked to JKM and WIM. And there only what Anjani sir, Tiwari sir said that IGX will play a role. We are playing a role in having our own index, which is, we are calling it GIXI. And this is now being seen as a reference price for India. Of course, people are not doing today contract linked to GIXI, but they keep a watch and they use that for their references. But it has not come into the contract. But we are waiting for that to happen. And for that only, we are trying to increase the liquidity in the exchange so that people get a robust price index for Indian market. And there we are really very different in the sense that the other indices like JKM and WIM, they are not discovered based on the trade, physical trade. They are rather discovered through assessments. And they are more for LNG imports, like when LNG is being sold on the high seas, and that price is determined from or that come from these indices. But when gas is into the grid, in Indian grid on the land, then there are a lot of things play into it because there will be long-term gas, short-term gas, there will be some domestic gas which will also be available for sale. And all of this mixed together, we discover our own price. So our own price has also has got more value. But of course, when people import, they look at the other indices. This is the whole pricing regime today. And because we will be largely importing, because after we achieve a level of domestic production of say 100 or maybe 110, beyond that further we have to incremental demand we have to meet only through import, and that import will be linked to some international benchmark, and there we will be left to the international dynamics. And that those international dynamics are something which actually is very much affected by geopolitics, very much affected by the demand and supply in other parts of the world. Other part of the world, particularly Europe is a big buyer, Japan, Korea, China, they are all big buyers. So demand in all of these regions also impact our price, and that impact us also. And there again, there is a seasonal cycle which is linked to those high demand period. And where, of course, in India, we are fortunate that we don't have that kind of seasonality in the pricing because our gas demand is not so much varying like power. You have a peak season, you have off-peak season, but in case of gas, we don't have that kind of marked difference between peak and off-peak. So that way we are saved from the volatility of the demand and supply, but we are still will be impacted by volatility of the pricing, which we are when we are importing this gas, and we will again this volatility exposure will increase as we go into future. But another input I'll give to the participants that since everybody expects there will be huge supply coming in after 2026-27 because due to COVID from 2016 onwards the investment stopped coming into the sector, but after COVID when people saw that there is so much of demand, then now investments have come into the supply side, and Qatar and US are going to expand their production or liquefaction capacity and production. Today it is about 400 million ton per year. they are going to ramp it up to something like 600 or 700 in 3 to 4 years. So that way, there will be good amount of gas coming into the system, and we will see a price will be softened over a period of time in 2 to 3 years. And that time we are all bullish in gas sector that this will definitely give a boost to the demand, because at lower price we have much higher demand. Only when price is something like $12, $13 or $15, then some demand actually shifts from gas to something else. But if it is less than $10, then there is a lot of demand. Even in the power sector, it's possible. In case of refinery, it is possible. Industries will also start buying more gas, replacing the polluting fuels. So all of this dynamics will play out after 2026, we see. And that way, we expect that may not be impacted by the import, because import will not remain so costly as we have seen in last 2 to 3 years.
Thank you, Mr. Rajesh. That was a very, very comprehensive understanding of the gas pricing regime. Thanks for sort of putting it in sort of a 5 minutes introduction. So that was very useful. You actually preempted 2 of my questions, but nonetheless, I will ask you this. You did touch upon long-term versus short-term procurement. So I wanted to throw the question back at you. What exactly will be traded on the exchange, and who do you see coming to the exchange to procure the gas that will be traded? And of course, you did touch upon price volatility. I think that will, as you have also said, that exposure will increase post 2026 when domestic gas productions come down. Are there any sort of risk mechanisms that we can sort of factor in to avoid those price volatilities? Because some impact from price volatility, we already saw the gas demand dipping a little bit. And because of that, also the utilization of our own LNG terminals stands at about 30%. So would you like to elaborate on some of these?
Yeah. So one is that what role we play as exchange. So to give you the picture, that we currently operate in a rather spot market. Spot in case of gas is generally anything same day, to month, and up to a year. So up to a year also is considered to be spot. And of course, in gas, mid-term is like 3 to 5 years, long term is 10 to 15 years. So that is the kind of definition prevails in gas sector. So we are currently there in the spot market, which is up to a month, and we provide option for people to buy day, week, fortnight, and month. And month can be 2-3 months also. So next month is most common. So what we trade today is a month is very, very common. So most liquidity is there on the front month contract. And of course, there are a few other things which I don't need to specify now, because there are delivery points, and we provide option to either buy and take delivery yourself, or we arrange it. So all of this. So and whatever price we discover, that is published on daily basis, and GIXI is the weighted average price for all the contracts which we have traded on that particular day for delivery of a particular month. That reflects the GIXI for that particular month. So this is the scenario, and generally people like to be hedged against all the volatility, because so there are 2 major indices, as I said. One is oil, second is gas on gas. So when you say oil, Brent oil is one where most of the contracts are linked to long term. So people want to be hedged against volatility in these 2 areas. So Brent. So what people do is that they do some contract which are linked to Brent, some contract there which are linked to gas, WIM or JKM or other gas index. The reason is that they know that if some geopolitical event will happen, and if Brent goes up to $140, then again they will be impacted. But if some part of the portfolio is linked to gas, then gas may be lower, oil may be higher. Overall average, you will be able to manage your demand. And same thing happens and there is a cycles when there are cycles when Brent is very low as it is there today, but the spot prices are very high. So this hedging is so buyer side they have to decide on two things: how much they should do long and how much they should do spot. And again, the buyers who have got more certain demand, they will like to do say 50-60% on the long term and balance they keep it for spot. And the suppliers also, the suppliers or marketers, actually marketers roles are very important. So marketers also, they maintain their own portfolio. So they have some long-term contract, there is some short-term contract. And now since there is a domestic gas also available, which they can purchase from the market, so they keep something domestic also. Because domestic is generally cheaper than you have long term or spot, depending on what is the price of Brent and price of the index of JKM or WIM. So these are the areas where people are trying to hedge their price risk. Only thing is we still don't have futures market, though there is a limited futures contracts available on the MCX, but they are linked to Henry Hub. So this contract generally is not used by the real hedger, because real hedger is not really hedged if they do a contract linked to Henry Hub, because none of our pricing is linked. A very small part of our long-term contract is linked to Henry Hub, but generally all other market gas is not linked to Henry Hub. So you don't get real hedge when you do a contract at MCX. So we think that once we have a liquid market at spot liquid market at IGX, and then we should also be thinking of having a futures contract either at one of the two SEBI regulated exchanges. So we have those things in mind, but we are today more focused on expanding the liquidity, expanding the diversity, expanding more people come. As Tiwari sir said that everyone is keen that we should be working for more people to join. Only thing is bilateral market still exists and it is all voluntary. So people have a choice to do voluntary trade or they can do exchange. And exchange transparency sometimes come in the way because some, of course, players in the market may not like that kind of transparency. So otherwise, we see a good support from the whole of the market.
Thank you, Mr. Rajesh. Similar problems like power sector, I see. But in the spirit of optimism, at what percentage of liquidity do you see the exchange reaching as the demand also increases over the next few years?
See, today we are doing about say 2% of total consumption that flows through exchange, which is about 3.5 MMCMD out of say 181 in 90 MMCMD. And we would like to reach to, and which is about 15% of the spot market, because again, there is a demarcation of the whole market. There is a 50% is domestic gas and balance 50% LNG, 80% is long-term, 20%. So overall, whatever spot market is there, we are about 15% of the spot market. We would like to ideally reach to a level of 5% at least in next 3 to 4 years, so that we really are able to give a good, robust price signals to the market. And that will be definitely, and liquidity will give you a lot of convenience that, okay, you can go to the market anytime and then you can fetch whatever you need. And I'll just add something here, which happened this particular summer, that power sector has become a good big player on the exchange also. The reason is because we had provided a flexibility, you can buy on date basis. And thanks to one of the transporter, GAIL, we have been getting the capacity confirmation in one day. And that actually given a lot of confidence to power plants. Now they are getting say NLDC advice maybe one day before that, okay, for ancillary, they need some gas, power to be sold. And then they are able to buy gas on the exchange one day before and book the capacity also, and then generate power by next evening peak. So that way, we have seen really, so even the percentage of power in the overall mix has actually changed from last year. So last year it was about 13%. This year we have moved to something like 17, 18%. The reason is more of power demand is coming into gas sector, and that I think can be a big boost to the overall gas demand if we do everything right in coupling of these two sectors. Then really we can achieve a good penetration of gas into power sector, which currently is very minimal.
Thank you, Mr. Rajesh, and thanks for giving me the transition to the next speaker. I think sector coupling is becoming I think a discussion point at many geographies, particularly how we sort of optimize and sort of benefit from our different policies and infrastructure. And as you said, power sector, we had the light pop up in all our power regulator as well as our system operators. So on that note, I'll move to Mr. Saxena. But before I pose a question to you, I would also like to mention to the audience, if you do have questions, do drop them in the Q&A box. We will take it up in a bit after we also cover questions from the discussant. But do make sure that you pop your questions there. So, Mr. Saxena, now that we have discussed the power sector interaction with the gas sector is increasing over the last couple of years. So I would like to challenge you a bit and ask, will gas be playing a crucial role in India's power transition? If yes, then how do you see its percentage share as part of the energy mix increasing over the coming years? And importantly, do we see gas being able to compete with the other fuels that we already have and provide itself as a lucrative option when we're looking to sort of suffice electricity demand? So over to you, sir.
Yeah, thank you, Shweta, and good evening to all participants and fellow panelists. We've transitioned to the power sector here. Before I get into the details, let me just throw in some numbers. Out of a total installed capacity of in the power sector of 450 gigawatt approximately, 25 gigawatt is about what the size of gas installed capacity is, gas-based generation. Out of this 25 gigawatt, about 16.7 gigawatt is the operational capacity. In terms of installed capacity, the gas-based generation is about 5.5%. But in terms of energy, it contributes up to 3%. Depends on the kind of requirement that happens on the day-to-day basis. Gas-based generation is considered a very flexible resource, and where I'm coming from is a use standpoint from the gas sector. So for us, it is considered a very flexible resource with fast start-stop times and high ramp rates, and this is a resource which can also facilitate frequency control, reserves, multiple uses like black start. Also, it can facilitate. So it's a very flexible and a very good resource in the energy mix. And given the energy transition that we are in, the increasing RE penetration, this resource has a very important role to play in terms of the flexibility it provides to the system as a whole. Let me come out here with some examples, but say, for instance, the RE penetration, it's growing over the years with increasing penetration and installed capacity is going up. We have seen about, I think the maximum RE penetration has touched 33% on 6th of July this year on an all India basis, and 73 gigawatt on 20th of May was the solar plus wind. I mean, this is a very 250 gigawatt of demand, and you are talking of 73 gigawatt coming from wind and solar. It's a sizable percent. But the real challenge for the sector lies in meeting the non-solar hour demand. Solar hour is okay, fine. We have a lot of substantive solar crossing 50 gigawatt even, solar itself. Now at the non-solar hour, we need flexible resources which can quickly ramp up, quickly come and replace the solar that has just disappeared and meet the demand, So from that standpoint, gas has a very, very important role to play. Resource adequacy challenges are also being faced across the country in the power sector. And here we have had this capacity that is available, but it was operating at very low PLFs. The PLFs had peaked around 2010 to 12. During that period, 65% PLF was the operating norm for gas-based stations. But these days, even 10 to 15% was very difficult to achieve. And as a result, there is one more factor that drives the usage of gas. The costliest thermal is less than 6 rupees, whereas gas prices in terms of energy charge rates are beyond 10 rupees. Add to this the fragmentation in the electricity markets in terms of HP dam, and all those things. They also create a fragmentation of liquidity and the ability of buyers to offtake gas. There are mental blocks that go into the high price dam as well. So the government intervened in the last couple of years. We have seen a sharp uptake in the demand in the power sector, and the government intervened last year, brought out a special scheme for funding from the Power System Development Fund, and gas generation was harnessed. Apart from this, they also went for competitive procurement of gas-based generation, 1,000 megawatt or so. We didn't expect because a lot of non-operational capacity is also there. It's mothballed basically. And lack of availability of gas is one of the reasons, and they have not been in the merit order, so they don't get schedules. So this special intervention by the government of India and calling for bids helped harness a lot of gas capacity. This year, again, in 2024, government brought out bids and capacity was selected for providing generation. About 12 to 1300 megawatt capacity was selected, and subsequently Section 11 directions were also issued, which were under emergent conditions for harnessing all possible generation. But then this happened during May and June, and in fact, what Rajesh ji had mentioned about the day-ahead basis, in fact, visibility of the demand is a very important factor in ensuring the fuel tie-up. It's basically how much you want to generate and how much fuel you can arrange. Without certainty in all these schemes, because these were being procured as reserves, and reserves are not guaranteed dispatch. So you do not know if you will get a dispatch or not. So how do you tie up the fuel? There a real challenge lies. So we were trying to provide visibility based on the requests we received from the generators. We were trying to provide a visibility 45 day ahead and a weekday ahead visibility, saying that, okay, this is the likely requirement on the number of days we need gas generation. But somehow that also was becoming difficult for the gas generators to manage fuel, So finally we came down to 1 day ahead. There was a much better scenario, and I think Rajesh ji has already vetted that. So that helped harness a lot of gas. But going forward, about your question, even in the 2031-32 scenarios that CA has projected in the optimal capacity mix reports, the gas-based generation is largely pegged at the same contribution level, 2 to 3%. It does not show a significant uptake in terms of absorption by the power sector. But the total size of the pie is increasing, and 3% that way would grow. So we still see an uptake happening in the gas sector. We expect that more would happen. And in fact, during the Section 11 period, we were able to harness about 15 gigawatt of installed capacity and of gas-based generation. So that is a significant quantum that could happen. There is one more point regarding the gas prices. Gas prices are $11 to $12 would roughly translate to, I believe, around 8 to 9 rupees of energy charge rate. But then this is the price for the gas. The average daily takeaway must rise, prices must rise to this level to make gas viable. That is one part. The other part that we observed during this experience was that when Section 11 directions were imposed and the government mandated that all gas generations be offered in the market supplied to beneficiaries or offered for reserves. Then in the month of June, the gas prices shot up by a couple of dollars. That also we observed, So all this impact, and I hope what Rajesh ji has already suggested, that couple of years down the line, prices might soften. We hope that the offtake would increase.
Thank you, Mr. Saxena. You gave a very, very nice insight into how we've been integrating gas into the power sector. Maybe without hijacking the discussion away into the power sector, quick follow-up question on you to you. Section 11, I think, is under extraordinary situations. But do we, and you also made the case about why gas would become important, particularly in providing reliability when we start doing our resource adequacy planning exercises. So do you see in the future sort of capacity markets coming in to be able to make sure that assets like gas are available for that future scenario where there is high penetration of renewables?
Yeah, definitely. That is a very, very important question. That is, in fact, we expect to happen in the future. With resource adequacy studies, they would also not only indicate any energy shortfall they would also indicate the peaking requirements, and they would also indicate the flexibility requirements, what kind of flexible resources you need. And with that background, it should drive the gas-based procurement and generation procurement from gas-based stations. And capacity markets are yet to be designed in the power sector. And I think some people must be working on that. Of course, we are also looking at it. But then they would, here again, there are things like challenges like we need some shorter term PPAs. So shorter term PPAs would also need to be enabled so that visibility into the fuel side is there and the flexibility of contracting is there. Here, in fact, I would also like to mention a couple of issues that were reported by the generators during the last few years' experience. For instance, inflexibility of gas contracting, frequent take or pay liabilities. I mean, we don't need the gas, but the gas generator comes and says to us, because of you, I've contracted this much. You must offtake this gas, and I'm required to run that costly generator, backing down a cheaper one. I mean, flexibility requirement is there in the power sector, and inflexibility in gas contracting is limiting the flexibility of the power sector. So this is where we need flexibility of contracts. The other part is that availability of cargo, not only offtake requirement. We have heard generators telling us, my ship is parked at the terminal, I need to offtake gas because the next cargo is on the way. So, I mean, those kind of limitations are there. So flexibility of contract is very, very important. And there is one more thing. If we really are looking at future capacity markets, offtake of gas in the power sector, let us also consider possibly some sort of strategic storage for gas. I mean, going forward, unless like we have our strategic petroleum reserves, if we are looking at gas and have set some aggressive targets, possibly there should be some thinking about the strategic storage for gas also. So that I think is all from my side. And I think one more aspect from the market side, if we are really looking at development of market on the gas front, possibly carriage and content separation in gas is also a very, very important aspect. In fact, electricity sector learned from the gas in the West, and here electricity has moved ahead of gas. And we would possibly suggest that in the gas sector also carriage and content and open access may be introduced.
Thank you, Mr. Saxena. Maybe one quick last question for you, and then I will direct the content and carriage question back at Mr. Rajesh and Mr. Tiwari to react upon. So definitely we've established the case for gas, but do you see other competing technologies like, say, storage or bidirectional use of DERs coming in as a lucrative option, or no, storage still has its own role to play? Just a quick reaction.
Yes, competing technologies are there. In fact, given the present growth that the country is seeing, 6% CAGR, we need all kinds of resources. Gas provides flexibility. Storage has its own role to play in terms of arbitrage, frequency control, and other services that it can provide. Demand response is already being enabled in the CRC regulations, but then we need to work out more details on that, and we are still looking at that. But demand response, last mile last megawatt may be very costly to serve. So possibly a demand response is a much cheaper resource. So all kind of resources are definitely required to be there.
Thank you so much, Mr. Saxena, for that. So maybe now, Mr. Rajesh and Mr. Tiwari, would one of you like to take on the question posed by Mr. Saxena, which is separation of content and carriage in gas and the complexity of gas contracts and not being flexible? And yeah, over to you.
So, should I respond to it?
Sure, sir. Please go ahead.
See, it is a very important question Mr. Saxena has told. And this is burning issue of carriage and content separation. Though when we talk with the traders, with the GAIL and others who are there are the different scenarios. But the separation of ownership, legal ownership is very, very important. And many times we have been asked that the market is not matured. But there is no definition of maturity, we can't define any much parameters. We have authorized, we have more than 35,000 kilometers of the pipeline, national gas grid. We have authorized to all the geographical area licenses have been given. And there is a not having proper utilization of the pipelines also. The spider net of the pipelines are being constructed. So that way this carriage and carrier content should be separated. So what we have done as a PNGRB, we have already formed committee, which is headed by Mr. Ajay Tyagi, and today the first meeting was there. We are working out with possible solutions for that. And second, one burning point is that the exclusivity. See, there are the marketing exclusivity, so we after 3 years, 8 years, or 5 years after the authorization, and there are the infrastructure exclusivity. One important thing I would like to share here that two elements. If you see the total, whatever we talk, unless the gas reaches to the charge area, it will not happen. This will be only theoretical talks. 307 geographical area at present, more than 5,000 charge areas are there. More than 5,000. Charge area means where the gas has to reach. Now, we have only reached at this stage 1,200 or 1,300 charge. Means lot many things has to be done. Who will do it? The CGD companies has a different capex issues, infrastructure issues, pricing issues, capabilities, manpower, sources, resources, so many other things are there. Unless these are freedom are given for laying of the pipeline, unless attractive tariffs are given. We have ramped up the tariff of 2022 in the interest of the CGD pipeline operators. We are further ramping up. We have given one nation, one grid, one tariff, already unified tariff. We have given integrated tariff, and further we are working how this spider net of the pipelines would be created, giving some parameters of the tariff, that these are the tariff, these are the inch kilometer, or these are the pipelines dia which are there. Anybody can lay it and have the contract with the CGD company, because CGD companies has limitation of the capex, limitation of the manpower. So this carriage and carrier content has to be separated, and these are to be separated. This is the need of the. Second is the exclusivity which are there. Every part of the country has to be marketed, but how? There are the limitations of resources, there are limitations of the gas contractings, etc. So those who are willing should reach to the balance charge area for supply of gas to the industrial, commercial, domestic, as well as for the single station. So, in that say, what I would like to say that this is in our agenda, this is in the agenda of the government. We are working aggressively. There are some litigations which are going on, for which we have already formed a expert committee. Based on the opinion from the expert committee, we will further take up. And we are also open to discuss with the CDD companies what way these exclusivity could be ended. Unless these are ended, as in the power sector, other sector, these has to come up. So my response to the audience is that we are working aggressively for ending the exclusivity as well as the opening of the market. And this is the need of the hour. And this is the way where the trading of gas would be done on the platform like IGS, etc. Otherwise, it's not possible. Everybody will do their own marketing as well as transportation. There will no freedom of the prices. There will no freedom. Everybody will build their cost. If you see the LNG terminals around 48 MMTPA, which is there, what is the utilization? Utilization on average of 50%. All are tilted towards the western part of the country. Pipeline is there at the eastern part of the country. So these LNG terminals have different scenarios of their cost, regasification charges which are there. That needs to also be uniform, and they have also to come up with the opening in the market so that these LNG terminals could be utilized. So PNGRM is working aggressively.
Thank you so much, Mr. Tiwari, for that reaction. Maybe at the paucity of time, I'll invite Ashutosh now to pose your questions, probably one question each to each speaker. And then we also have 3 questions from the participants, which seem to be interesting. So we'll take that up as soon as Ashutosh's questions have been addressed. Over to you, Ash.
Shweta, just I'll add, because that was very interesting thing Samir said, that there should be flexibility in gas contracts. And that's exactly what we have done at IGX. Otherwise, gas contracts, bilateral contracts are very rigid. You need to buy, say, during that particular period and uniformly. And our contract were also designed that if you are buying on a month basis, then every day you have to buy a uniform quantity. But we should change that, and we allowed that, okay, in that particular month, 30% of the volume you can take in one day, total volume. And that actually gave a lot of flexibility to power players, that they, even if they don't get any dispatch for some days in a month, but overall they are able to consume that kind of gas. That is good for us. So that is one which we have done, and because of that only we have seen that good scale up has happened this summer. That was what I wanted to add. Yeah.
Thank you, Mr. Rajesh, for clarifying on the contracts. Ash, over to you.
Hi, just a quick question, really. I mean, very profound discussion, but somehow, just to inject a bit of realism, the gas demand, how is it calculated? How is it determined? Is a really open question, and I really don't understand. If I'm allowed to share my screen, I will share a slide which was prepared by me in 2019. It is quite interesting. Can you, one second, can you see the slide?
Not yet, it's blank.
Yeah.
We'll have to take it into presentation mode. Yeah, perfect. Go ahead.
Right. So I did this is from a paper I wrote sometime in 2019, 2020. What is clear from this is that the government of India's vision about the gas demand stands at very odds with what the actual outturn has been in 2020. I have my own numbers there as well. Our numbers were slight. I don't. And this is not a criticism. Getting gas demand right is the devil is in the details. This is not easy. What I will say though is that the cost of getting this wrong is very high, and countries pay a price for this for decades to come. The best example is actually Turkey, which did a similar exercise. Somehow their gas demand estimates were way over what their outturn actually came out to be. And Turkey, as you know, is at least India is at, in a sense, not in the middle of a whole geography. If you look at the geographic position of Turkey, that gas demand expectation has proved to be a very expensive exercise for Turkey. So I would like to understand actually, if it is possible, how is this gas demand exercise done? Because there is one aspect that I have not seen. I mean, we can talk a lot about renewables, power generation demand, etc. What I didn't hear a word about in this conversation today is that about transportation liquid fuel demand. Because actually the story in Asia, particularly in China, and so I just have for you some reference numbers from China as well. The China numbers came out to be somewhere between 395, 400, between 350 and 410 in 2018 estimate. 2024 numbers are 425 BCM. So I would like to kind of, submit to the panel here that in the light of this extreme competition coming in, where, you are going to buy gas from the international markets, how the hell are you going to compete with China, which is at 425 BCM market? We've not been really able to touch 70 BCM. I think around 68 or 69 BCM is the latest number as I understand it. It's very difficult. And I mean, I will, I don't want to kind of, be a bully in a China shop or whatever. But the real problem and the real devil is in the reform. We have not spoken a word about, we have spoken something about common carriage. But, where is this flexibility for gas marketing in India coming from? Is there any gas release program? Is there, if, is there any incentive for private sector players to actually get into gas marketing, aggregate demand, create that competitive market? Because if you don't have that, you having a common carriage is only going to create us access for one company, which is going to pay for carriage and content separately. So, I would like some discussion, please, if possible, on how is this gas demand actually calculated in India? What confidence interval should we have on these numbers? Because if you get these numbers wrong, it's a, all your planning for the whole sector is driven by that. I would submit that 15% primary energy penetration of gas is probably not going to happen even by 2030. But I would like the panel to respond. Thank you.
So, should I, Mr. Asutosh?
Yes, sir.
Go ahead.
They have given very good question to us, and is a very interesting as well as very complicated question which has been asked to us. But see, for any demand which are to which are to be projected like 15%, we don't have calculation. 6 to 15%, we don't have calculation. But if you calculate 6 to 15%, then 15% of what? And 6% is of what? That we always talk. So there are a couple of things for which possibly numbers are there and numbers are given to achieve. Now, as your question is that how we calculate the demand. See, these demands, as I have already told, that are means mix of many issues. I have told some of the issues to you. Just to elaborate further issues. When I in the PNGR we went a deep dive and try to understand why this is not increasing. What are the reasons for that? We found that the many LNG terminals which are there don't have the means sourcing contracts. Gas sourcing is not there. Many LNG terminals doesn't have the pipelines. Both LNG terminals are there, pipelines are there, but how to reach to the farthest area is not there. So projection has been done is a number we can't challenge and number we can't vet it also. But problems we can see that unless these interconnections are there, demand will not increase. Whatever we say, whatever planning we should do. Why the demand is not increasing? We are planning too much. We are telling in every conferences we are talking that 6 to 15% we are going to increase, and this is the target. This is the government. In order to have deep dive of that, and soon it will be public after 2 months or so, we have created a committee of Vision 2040. Now, this is not a study on theoretical basis. This is basically on a practical basis. We are coming up. What are the regulatory changes are required? What are the government supports are required? And what are the things where the entity has to do to achieve this 15% target, which are there. So for this, we have already have the committee, and we are working very, very seriously on a practical basis. I have told about some of the practical aspect about the integration of these value chains. And PNGRB as well as the government of India is working for interconnection of these value chains, and wherein the CBG and other things will also be added where the in the pipeline. So that way, and one more thing, important things, we are finding so many deficiencies in the access code also, which includes monopoly and other things also. We are working on that. Transport system operators, we have already come up with a PCD for that in order to have deep dive. And what would be the best regulatory practices for sustainability? So that way, Mr. Asutesh, to give your question to your answer, there is no standard answer for it, but there are many gaps which are there. And unless these gaps are fulfilled and are interconnected, these demand assessment, whatever we do, are only theoretical. But on practical aspect, surely you are going to see the light, and some of the findings will be in public. It's not that PNGRB, whatever we are doing, including the monopoly, including the exclusivity, including the Vision 2040, including the customer satisfaction, including the safety. We have found that there are many gaps in the safety, many gaps in the consumer satisfaction in the petroleum sector are there. So that way, all these things are going to add, and these are the patches which we want to means aggregate. And our effort as the government effort is that yes, whatever we have means targeted should be achieved. I think you may be satisfied with my answer.
Well, tell me, sir, I will not bear the point. I mean, as I said, this demand estimation exercise is a hoary exercise. It's not easy to get it right, but the sector's planning goes around on that. I would like to have your comments on actually some sort of a gas release program, because unless that happens, I'll tell you why. In 2014, there was a big rush towards securing LNG from the US. India does not have a very good track record of international LNG procurement, by the way. You might recall $2.97 per MMBTU, it became $4.20 for a very long time. That 420 became a joke for a very long time. Then it became $8.40. There were lots of hope in 2014 that, because this came to a point in May 2014. And then, we had this huge number of, even including Reliance, which has only in the last few months finally extracted its entire position from the US because it is no longer going to be in the US. They bought into the shale gas basin plays. What did happen? The new government came in and said that, your own, make in India, the shipping for LNG has to be made in make in India.
I know.
And the slots that were taken up by the Korean shipyards were given up. It was unprecedented to see that. I am sorry, sir, but as a result, the credibility or the confidence that India enjoys in the global gas market is not that great. It's something that we should acknowledge, and we should somehow be able to work our way around. If you're doing a Vision 2040, fine, okay, 15% instead of 2030 by 2040, fine. But let us work back and say, how is it going to work out? Because we do not see, at least the studies that we are doing in Asia Pacific right now, we do not see power sector in Asia moving in the same direction as it worked in Europe, where the gas-fired power generation growth, because that world has changed. That world has changed to the world of renewables. The world of power market design has changed. So, but what has actually changed is actually, and the early evidence is in China, where it might surprise you, but about 30% of new trucking in China is CNG or LNG based. And there is a definition there that they don't look at this as regasification terminal, but a receiving terminal, because a liquid to liquid transfer carry is also possible. And this is perhaps, I would also like to respond to Mr. Saxena's point about strategic storage. That, if you have the facilities there, having LNG tank storage in the existing terminals is the only way forward, because India is not geologically positioned is not geologically endowed for gas storage. So, we have these limitations. I don't know how this is going to play out, but it is not easy. I would actually say the transportation related demand is something that we perhaps, if we are doing the Vision 2040 exercise, we can give you some inputs, but I found that missing in the conversation, but that is the biggest change that is actually happening within the new markets that are coming into gas and LNG.
May
Thank
I
you.
intervene here? Maybe on this wonderful note, I could probably take a commitment from Mr. Tiwari that when this vision document does come through, and if we are allowed to go through that, then we could have a follow-up debate, just looking at some of these peculiarities that we need to address, and have sort of a much more focused discussion on those aspects. And given that we have a shortage of time, I'm just going to address some of the questions from our audience. So I'm going to first read these questions, and I will let the experts pick which one they would like to sort of address. I think one is, two of the questions are really talking about stranded assets. One of the persons asks if we can sort of use these stranded gas assets for data centers, particularly those that are in the south of India. And a connected question from that is, if you're not using the existing non-operational gas capacity, should we sort of retire or remove them from our mix so that we don't send the wrong kind of price signals and confuse sort of the pricing determination? So these are the two questions related to the stranded assets. And one, I think, for Mr. Tiwari, firstly, appreciating the reforms on VAT for CNG and PNG. But somehow LNG has been missed in that VAT reform. So do we see something coming up with regards to VAT applicable to LNG too? And I think the last question was about gas grid operator. I think that's already factored into this 2040 vision. So it's a yes, I'm assuming. So, but we will hold our horses for the next debate on that topic. So over to you, Mr. Tiwari, and then Mr. Rajesh and Mr. Saxena to talk about the standard assets.
Yeah, so far as the Vision 2040 are concerned, that will come within by January 25, it will be there. And we are trying to have by December also, we are targeting. Now, responding to the Asuto's question about the LNG. Yes, LNG is going to flow in the country through trucks. There are the infrastructure which is being created. There are many things which are there. Roads are required, national highways are required, that infrastructure are required. So that way, LNG by trucking is one of the area where it will come. And we are also, government is also eyeing on that for creation of the infrastructure. As regards the VAT reduction are concerned, with the efforts, as I have told, that with the follow-up with the state authorities, Bihar has done yesterday, but many states have already, with the persuasion, have reduced the VAT. And LNG, where the taxation means incentive or taxation reduction will be there, we will also follow up when these will be means we will also take up the matter with the central government as well as the look for inclusion as the GST part, as well as if the VAT has to be reduced, we will also take up this matter. That was not in our card. Our focus was on the LNG, on the PNG and CNG, where we will be in a position to convince. Now, once the LNG infrastructure is getting, we will also take up this one. So that way, it will be.
Thank you so much, Mr. Tiwari. Mr. Rajesh and Mr. Saxena, quick reaction on the standard assets.
Yeah, should I come in?
Yeah.
Okay. So regarding whether this can be used for supply of power to data centers, of course, they can be used. And coming to the stranded assets, the non-operational assets, and removing them from the 10 gigawatt, maybe non-operational gas capacity to be removed. let me say that we should not jump to removing this capacity and writing it off. My personal view is like this. See, this is non-operational because for years there has been no opportunity to schedule and run these plants. They are mothballed plants. And this year, one couple of plants have come back online. They are trying to run up, even going through the NCLT process, and they have revived. So let us see if this capacity can be revived with a little expenditure, and we should keep it live. I would also go to the extent of saying that presently we are also thinking of giving kind of long-term visibility in the power sector. Say for the next year, we float bids right now and say that we need these gas stations for the next summer, or maybe up to maybe August, September, October as well. So giving this visibility, these gas plants can make an effort to come back online, maybe come out of the mothballed state, become operational, because there are people who are saying that if you give us visibility, we can make an effort to bring this capacity online. And given the resource adequacy crunch, we should be able to make all out efforts to bring this back online. So that's my take on the stranded capacity and the non-operational capacity.
Thank you, Mr. Saxena.
Yeah, Shweta, I'll also add a few things like what I agree with Sameer that we should not write it off. We still have 2 years by 26 or 27. I am very bullish on this. And of course, intermittency, if it is possible, that we will see as we go along. So that is possible. Second thing, what I think I should add for what PNGRB has done, Tiwari sir has done, that they have pursued AP government to reduce the VAT. Earlier, it was about 24.5%. And this year only, it was reduced to 5%. So now the plants which were not becoming dispatchable, so 25% additional cost was a major cost. I think that will further relieve these costs to the sector, and that will add to dispatchability of these power plants. So I think today what it looks like standard may become dispatchable maybe in 2 years' time. And I always tell all the investors that you should look for these assets. And if it is available for any of the renewable company, because renewable company having portfolio of 2 gigawatt, 3 gigawatt, they can easily have this 200 to 300 megawatt of capacity to meet the intermittency. And that's quite possible. That was 2 things I wanted to add.
Thank you so much, Mr. Rajesh. I think it's clear. So long-term view is sort of the key message. We don't yet fully see all the cards on the table, so play it accordingly as they open up. So on that note, I would like to invite Mr. Sethi to make his closing remarks on the conversation that we have had so far.
Thank you, Shweta. In the 5 minutes assigned to me, it is impossible to meaningfully address today's discussion. I will instead share some facts so that all participants can reflect upon what has been said today. First, India's gas consumption grew from 64.3 BCM to 65.7 BCM in the 12 years ending financial year 23-24. This yields a growth rate of 0.18% per annum. Gas contributed less than 5.8% of India's primary commercial energy consumption in 23-24. This is down from a historical peak of about 9%. Per capita gas consumption has also been declining. Less than 2% of the gas is actually traded in the market. By contrast, India's primary commercial energy consumption grew at 4.2% per annum in the 10-year period ending 2023 and grew 7% in 2023. If we assume a modest 4.5% growth rate in our primary commercial energy consumption till 2040, gas will need to grow at 110 times and 59 times its annualized growth rate in the previous 12 years for a 15% share by 2030 or 2040, respectively. So that's how far the hill is. Undeterred by these facts, in 2013, PNGRB estimated the 2030 gas demand as 272 BCM, which is over 4 times the actual 23-24 consumption, and will take the gas share to over 17% of the likely primary commercial energy consumption in 2030. The minister recently set a target of 183 BCM for 2030, which is 2.8 times the 23-24 actual consumption, and will yield about a 12% gas share by 2030. This is roughly compatible with what MOPNG's earlier projections and Hydrocarbon Vision 2025 released in 2000 had said. What is important, though, is that none of these targets is attainable. They are all unattainable. The demand estimates are completely divorced from reality because they are made without reference to prices. I have written extensively on gas pricing in India, in EPW, Hindu, and elsewhere, and most recently on April 24-23 in the Indian Express, questioning the latest gas pricing policies. Without going into details, let me share a few serious anomalies in India's gas pricing. In India, we overlook that globally, natural gas and LNG are two different commodities and hence priced differently. Nowhere in the world is natural gas priced based on a formula or with linkage to crude. We do both. Our formula and the linkage percentages also change for different producers of the same commodity. Nowhere in the world is there a separate pricing for what we call, quote unquote, difficult fields. In extractive industries worldwide, resources in difficult horizons remain underground till they can be extracted economically, but not so in India. We hold the world record for number of dry wells. We have destroyed producing fields with mismanagement and lack of experience. We have built huge surplus and stranded capacities in the gas and LNG sectors, and all this at the cost of the hapless taxpayer and the consumer. Importantly, when LNG is offered at a fixed price of $3 and $3.50 per million BTUs under 20-year contracts, we find peculiar reasons to not sign. And when local gas is offered at $2.34 per million BTUs under a 20-year contract, we allow the bidder to renege the offer and pay the bidder $4.20, $8.40, and even $12 per million BTUs. I will close by saying that energy is a very serious topic and not every economist is an energy expert. We have suffered repeated blows from Enron to the most recent gas pricing policies, which have set us back by years. India can never become Viksit Bharat if we fail to deliver energy policy that are driven by serious and defensible research that takes all ground realities into account. Ashutosh listed a few of the challenges. With this, let me thank all the panelists for their great contributions and all the participants who took the time to participate in today's discussion. Thank you and have a good evening. Thank you.
Thank you, Mr. Sethi. I think point taken. While we are being bullish, a lot more homework to do to support it being bullish. So I think a lot of experts are making notes, and so we would like to thank the audience as well for participating quite enthusiastically. And as promised by Mr. Tiwari and others, we will be back with another gas debate in a few months once we have the Vision 2040 document, and hoping that many of the challenges identified today will be addressed in that and also in the years to come. So wishing everyone a wonderful evening and a lovely weekend. Thank you.
Thank you.